Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that shape the companies we invest in and work for. Today we're diving deep into Sphere Entertainment Company's latest annual report for 2025. And let me tell you, it is a wild ride from cutting-edge entertainment to some serious financial juggling. So buckle up before we dive in. If you are new here and love getting the real story behind corporate filings, make sure you are subscribed. And hey, join our growing community over on Discord, linked in the description below, where we dissect these reports further. Alright, let's start by looking at Sphere Entertainment Company's financial position as of the 31st of December 2025. It is always good to see where they stand. Their total assets stood at a massive $4.2 billion. That is a lot of zeros, but remember, assets are just what they own. We need to see how much debt they're swimming in to get the real picture. And speaking of debt, total liabilities hit $1.97 billion. That is a significant chunk, and it makes you wonder how much room they have to maneuver financially. Now, on the equity side, Class A common stock shows about $297 million in value. This represents ownership for regular shareholders. And then there is Class B common stock with $69 million. It is interesting to see a dual class structure, often meaning different voting rights, which can hint at who really holds the power. Additional paid-in capital rings in at a whopping $2.47 billion, suggesting a lot of stock was issued above its par value over the years. They also have treasury stock worth $50 million. This is essentially stock the company bought back, meaning they reduced their own outstanding shares. Why they did this might be a story for another time, but it is a notable number. Now here is a number that always catches my eye, an accumulated deficit of $186 million. This means that over their history, they have spent more than they have earned. Not uncommon for companies investing heavily in growth projects, but it is something we need to keep an eye on. Moving on to the income statement, let's see how they performed financially for the year ended the 31st of December 2025. This is where the real story of their success or struggles lies. First up, revenues. Total revenues for the year were $1.22 billion. That is a healthy top-line number. But right behind that, direct operating expenses were $589 million. These are the costs directly tied to producing their services, like running Sphere. Then we have selling general and administrative expenses at a substantial $441 million. These are the costs of running the overall business, from marketing to management salaries. When you add all those costs together, they are reporting an operating loss of $229 million. So despite bringing in over $1 billion, they are still spending more than they are earning from their core operations. This is a critical piece of information. But wait, what is this? A massive $346 million gain on extinguishment of debt. This is a huge number and signals they likely restructured or paid off a significant portion of their debt, which is generally a positive sign for financial health. It is important to understand this gain isn't from making more money selling tickets or ads, but from financial engineering. Thanks to that debt gain, their income before taxes looks positive at $57 million. It is a stark contrast to the operating loss. And ultimately, after all the numbers are crunched, they report a net income of $33 million. This looks good on paper, but it is crucial to remember that a big chunk of this positive result comes from that debt extinguishment, masking the underlying operational losses. Now, let's break down this performance by their two main business segments, Sphere and MSG Networks. Starting with Sphere, their flagship entertainment venture. Sphere revenues jumped by a significant 27% to $781 million. This shows strong growth, likely driven by increasing demand for their unique immersive experiences. However, direct operating expenses for Sphere also went up by 20% to $318 million. As they host more events at Sphere, these costs naturally increase. Selling general and administrative expenses for Sphere actually decreased by 10% to $389 million. This could indicate they are becoming more efficient in managing their corporate overhead as the business scales. Despite the revenue growth, Sphere still reported an operating loss of $268 million. This highlights the enormous investment required to build and operate such a groundbreaking venue. It is a high-risk, high-reward situation. However, when we look at adjusted operating income, it is a different story. Sphere's adjusted operating income shot up to $144 million, a massive improvement from a loss in the prior year. This adjusted number strips out certain costs to give a clearer picture of the ongoing business performance, and it is a much brighter outlook for Sphere's operational health. Now, let's turn to MSG Networks, their media segment. MSG Networks saw a notable 15% decrease in revenues, bringing in $438 million. This segment appears to be facing headwinds. On the flip side, direct operating expenses decreased by a significant 21% to $271 million. This suggests they are actively managing costs, likely in response to lower revenues. As a result of these factors, operating income for MSG Networks declined by 21% to $38 million. While still profitable, the trends here warrant attention. Their adjusted operating income also saw a 9% decrease, settling at $117 million. It seems MSG Networks is navigating a challenging period, but remains a contributor to the overall financial picture. Let's look at the overall company performance comparing the year ended the 31st of December 2025 to the year ended the 31st of December 2024. The most striking change is the net income. They went from a massive net loss of $325 million in 2024 to a net income of $33 million in 2025. This is a dramatic turnaround, but remember that huge debt extinguishment gain we discussed earlier is a major factor in this positive swing. The positive income from discontinued operations in 2024, totaling $24 million, is no longer present in 2025. This means those businesses that were sold off are out of the picture entirely. Flipping through the notes can sometimes reveal crucial details. Here they discuss revenue recognition, a key accounting policy that dictates when they can book income. They mention arrangements with multiple performance obligations which can get complex, especially with long-term sponsorship deals. And look at this. Deferred production content costs for Sphere are substantial, $170 million in 2025. This is the money spent on creating their immersive shows, which they expect to earn back over time. It is a direct investment in their future entertainment offerings. Their total revenues from contracts with customers, a key term in revenue recognition, shows $1.21 billion for 2025. This figure represents the income they've recognized from fulfilling their contractual obligations. Diving deeper into the financials, these notes provide more context. Goodwill for Sphere, it is about $46 million, but for MSG Networks, it is a hefty $297 million. Goodwill represents the excess of the purchase price of an acquisition over the fair value of its identifiable net assets. The substantial goodwill in MSG Networks suggests they've made significant acquisitions in that segment over time. And then we see impairments. The MSG Network segment took a $65 million goodwill impairment charge in 2025 and another $61 million in 2024. This is a significant red flag, indicating that the value of their MSG Networks acquisitions has decreased and their future prospects might not be as bright as initially hoped. This directly impacts their reported financials and can signal underlying business challenges. Risk factors are always a must-read to understand what keeps management up at night. Under Sphere business risks, we see worries that their success hinges entirely on the Sphere experience's popularity and their ability to attract advertisers and performers. It sounds like a put all your eggs in one very expensive basket kind of situation. For MSG Networks, the risks are more about debt, losing distributors, and the declining subscriber base for traditional television. They are clearly feeling the pressure from changing media consumption habits. And there it is, a major risk factor. We have substantial indebtedness and are highly leveraged, which could adversely affect our business. This is a consistent theme. They have a lot of debt. This next point about adapting to new tech and changing consumer habits is key for MSG Networks. It is a constant battle to keep up in the media world. Across both businesses, they acknowledge intense competition. For Sphere, it is competing for entertainment dollars and ad spend against everything else. For MSG Networks, it is the crowded landscape of media consumption. Of course, no modern business report is complete without acknowledging the ghost of pandemics past and future. They wisely mention how public health emergencies can severely impact their operations and results. Overall, Sphere Entertainment is a company at a crossroads. They've made a massive bet on the future of entertainment with Sphere, and the initial revenue growth is promising. However, the operational losses there, despite the big debt win, alongside the struggles at MSG Networks and the significant debt load, paint a complex picture. The company's direction hinges on Sphere's ability to become consistently profitable, and whether MSG Networks can adapt to the evolving media landscape, or if it becomes a drag on the overall business. It is a high-stakes gamble with the entertainment of tomorrow. What is your take on Sphere Entertainment's strategy and their financial health? Do you see Sphere becoming a dominant force, or will the debt and operational challenges prove too much? Let me know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button to help us out, and subscribe for more deep dives into the financials that matter. And don't forget to join our Discord community, linked in the description, to continue the conversation. Thanks for watching, and I'll see you in the next one.